I was talking to a builder not long ago. They said it's almost 40% of the cost of the build is all of the red tape and taxes and permits that are required to build the home. And so people are saying, you know what, I want to build my own home. It's a lot harder to finance building your own home than it is to buy a Minto built new home.
Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm a level 2 mortgage agent, and I'm joined today, not by David, but we got a special guest here. We have Derek Serra. He's the president of Westboro Mortgage, which is a mortgage investment corp. Derek, thanks for being here. Welcome.
Thanks so much, Paul. Great to be here.
Awesome. So we've been talking a lot lately about like different types of financing, and I know our listeners are always intrigued into kind of pulling back the veil per se and kind of learning a bit more about our side of the business and how we work, how we operate, and more so for them as applicants, like what is out there for them in the mortgage space. So I'll start off with you personally, Derek, like maybe just kind of give our listeners an idea as to like what your role is with Westboro, what your experience is in the mortgage market, and what got you into the kind of private lending space.
So my career started in 1994 as a teller at a bank.
Okay.
And while I was in university. And so I've been doing this for, I don't know if that makes it over 30 years, a long time. And so I worked my way through, it was RBC. And so I worked through RBC for many years as a regional vice president in the branch network, regional vice president overseeing mortgage specialists. And so that was kind of the role that really had me very much focused on mortgages. And as we've seen more and more mortgage specialists from all the banks making the move to the broker space, I watched many of my friends kind of join me as I joined the alternative space to start, the alternative in the insured space. And in that role, especially when you're doing insured mortgages, it's difficult to do that in Toronto, just because at the time the cap's now since increased, but back then the cap was $1 million to purchase a property to get an insured mortgage, which had me going out to outside of Toronto and had me coming out to Ottawa. And as anyone knows who does business in Ottawa, there is an incredible group of mortgage brokers in the Ottawa space. So as I started spending more time in Ottawa, my previous employer really started to see a lift, which was great. And as I spent more time in Ottawa, I actually got to know the Westboro brand. And so Westboro is a private lender based out of Ottawa. It was a family-run business for many years. And then it was bought by a capital corporation who then brought me on just over 5 years ago as the president at Westboro. And so it's kind of been an interesting journey all through the mortgage space right across the country. And, now in Ottawa, and I'm loving every minute of it.
Yeah, so it seems like a very organic move then, right? Like just kind of opportunities present themselves in the same space and you just kind of, it made sense, make the move, learn a bit more, further educate yourself, et cetera.
Well, it's one of those things where in life, people say just kind of things will happen, let them happen, go with the flow. As a banker, I've never been a go with the flow kind of guy. But in hindsight now, go with the flow really kind of worked very nicely for me in my career. And it's been a wonderful journey. I really enjoyed the bank. I really enjoyed and learned a lot in the alt and insured space. And now in the private space, I mean, you're as the market is shifting, you're consistently every day you're learning and doing something different and evolving with the times. And so it's been a wonderful journey.
Yeah, that's perfect. I appreciate the insights as well. I know like a lot of us, I come from a banking background as well, myself working at TD for many years. And I mean, there's countless brokers, as you mentioned, that were mobile specialists in one bank or another. Now, the general public, I would say, when they hear private financing or private lending, they instantly think, oh, this is a last resort. This is like, there's absolutely no other option. And these people are on the verge of bankruptcy and they have to go to a private lender. Can you tell us, like, what are the common misconceptions about private lending and how is it not that, basically?
Yeah, you know what? I agree. And oftentimes that's kind of the feedback I get too in my social circles. It's people kind of saying, oh, like, what kind of clients are you dealing with, this week, this month? And I'll tell you, like, it is as the market has shifted and when I say the market shifted, I mean, ultimately, if you go back to like pre-COVID, where the market was, and then you saw what happened during COVID. So rates dropped significantly, house values increased significantly, And there became a significant interest and appetite to get into the real estate market beyond what it ever was before. And so we had a ton of people who got into the market because rates were at, all-time lows, which made sense for them. But what potentially wasn't expected was the drop off of house values, and when that starts to happen, all lenders begin to pivot pretty hard. So when I say pivot, I mean little things that they'll start to pull back on, self-employed exceptions that they'll grant, new to Canada exceptions that they'll grant, high net worth programs. There are programs within banks and alternative and insured lenders that they offer when the going is good. And when the going isn't, they pull back on some of those products. And so in essence, many of those clients who have mortgages with the top 5, 6 banks, if they went to get them again today, they wouldn't qualify under the programs that existed in past. And so you have bank clients who have good beacon scores. And the challenge is really that they don't have the income confirmation that meets the criteria for the lenders that they either, had at one point or need to have now. And so, ultimately the private lending space fits that need very nicely. And ultimately what we do is it's always meant to be a short-term solution. So it's not necessarily that we're going to replace the banking relationship that clients would have for their mortgage, but we'll help them with a step in that direction. So if it's a refinance they need now for temporary money or a purchase they want to close on, we'll help them with it and allow them the time to get their finances in order so that they have the education, they have the sophistication, and then they have the documentation to allow for them to re-enter the banking world or at least the alternative world in the next kind of 12 to 18 months.
Yeah, and I think you hit the nail on the head there. Like, especially over the pandemic, there was a lot of employment shift. Some people were employed and then became self-employed, and that's changed their whole kind of financial picture and layout. So, they need to think creatively for a couple years, get their feet on the ground, and then kind of move forward as well. So I thought that was very interesting. From what you see come across your plate, when does a private mortgage make sense? And on the flip side, when does it absolutely not make sense for an applicant?
Yeah, great question. And I would say, the most important concept of a private solution is that it is short term, because it is going to be more expensive, obviously, than a bank mortgage. And just for kind of optics, it's about double. So if your rates are right around 4% now, a private mortgage would make sense at closer to 8%. And we can talk about like why it's more expensive. Ultimately, it's where the money is coming from is the cost. It's not to say that we're necessarily, making that much more money. It's the source of funds that creates the cost for the client. But ultimately, it's the short term in nature that makes the most sense on the private side. So when we think about short term nature, I'll tell you about a deal that we've got going on. Just came in yesterday morning. 2 retired teachers, they have beacon scores in the 800s, and they have found a property that they want to move to in cottage country. And so they want to buy that property, and they are going to sell their house and sell 2 of their rental properties. And eventually they're going to downsize into this kind of retirement scenario that they're going into. And so, but they want to close on the cottage. Well, I mean, I guess you could call it a lake house. It's beautiful. They want to close on that. They want to get their stuff moved in, and then they want to sell the other properties. So in the meantime of the move, and they have tons of equity in all the properties. And so everything is very well secured in this case, but they kind of want the flexibility to close on the property, move into the property, and then in time sell the other properties. Now, if this is these are bank clients. If this is a bank situation, the bank says, okay, so long as you've sold your house and your other properties, we will obviously give you what's called a bridge loan, and you can move into the new property where you go. But the reality is, Paul, as you know, life doesn't always work that way. And sometimes the timing of things don't allow for that. And so ultimately, we will step in and help these wonderful people with this kind of transaction. And in very short order, once their house is sold and the rentals are sold, will be paid out. And if there's a small balance that's left at that point, based on their pension income, they will easily be able to qualify for a small bank mortgage, and they'll sail off into the sunset.
Yeah, bridge loans are something we've been talking about a lot lately because right now we're in that environment in the market where people are buying new and kind of, pushing out their closing date 4 months in hopes that they sell their property before that point and can get their bridge loan and get everything organized. One thing you said that I think is probably the biggest misconception is that people that go to private lenders are, it's a last resort. I would say it's actually the complete opposite, that most people that are using someone like Westboro are actually extremely sophisticated investors and might have like a large multitude of properties and just cannot qualify with other lenders, right? Like they are actually so savvy that they know that this is going to be short-term money, it's going to be a higher interest rate, but the delta is so much so in their profit margins that it makes sense for them to do this. And maybe it's the only way they can get that project done or that financing done, right? So,
Well, and I totally agree with that. Like, another example would be, as I've dated myself at the beginning of the show, I can tell you, like, when I was a banker and actually doing people's mortgages, back however long, 25 years ago, most clients had one property, like they owned their home. And wealthier clients maybe had a rental property and or a family cottage property, things like that. But what started to happen, kind of take you through the 90s, the 2000s, is people started building condos. And as condos started to kind of really emerge, it started in Toronto. And it's not to say there weren't condos there now, but it became a much more of a growth scenario. And so people started to see these condos and say, you know what? Maybe I'm not just going to use real estate as a place for my family to live and my family to cottage. I might start using real estate as an investment. And so as these condos were being built, and like if you look around, we're in June, so the Jays are playing. If you look around kind of the Sky Dome or the Rogers Center, like that used to be parking lots around the stadium. And now it's just tons and tons of condos. And so those condos were built, people bought them and rented them out. And the thing that I think gets forgotten sometimes in today's environment, we can talk a little bit about the condo market as it is in 2026, but you go back to, the year 2000, 2010, people made a lot of money on these condos. They bought them for $180,000, $200,000, rented them out. They carried. Life was good, and then they wound up buying two more the next time that builder built, and then they bought another two more the next time that builder built, and their portfolio grew significantly. Their equity grew significantly, and it became a great financial decision for their family. But it also made financing way more complicated. And so then you fast forward to today, and it's shifted for those who bought in the last few years. But I think the condo market gets a little bit of a bad rap just based on the last few years. If you take a step back and look at it for as long as I've been looking at it, a lot of people have built a lot of net worth through real estate. But the challenge is always with real estate that you can only technically through bank financing qualify for so many doors or so much money. And then you might need someone who's got a bit more of a liberal approach to reviewing does it cash flow or not, and that's more in the world of private lending.
Yeah, and I think you're exactly right. The traditional banks really are tailored towards the homeowner that wants to have one rental property, right? It's kind of like their maybe retirement plan or something they're going to put their friend or family's child into for 10 years and then sell it or something like that. That's kind of the majority of people that are investing. On the flip side of that, there's people that are actual real estate investors, and they're very limited as to who they can speak to about financing because, like you said, a TD or an RBC or whoever, they're only going to allow you a certain amount of doors. And then after you have more than that, you're kind of on your own, right? You have to kind of figure that out. And that's where a broker can help kind of facilitate not just this project, but planning for the future to make sure that you can continue to get financing as you acquire more doors and kind of grow that portfolio. Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Even the best photographer can't hide drywall dust and paint splatter. And every day you delay listing could mean missing peak spring pricing in Ottawa. A to Z Cleaning Expert gets your property truly photo ready. Don't risk going to market half ready. Mention TowRep at atozcleaningexpert.com to receive priority scheduling for your next listing. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal. One thing I wanted to ask you about specifically, Derek, because there's been a lot of discussion recently about the federal government suggesting they're going to step in and essentially bail out the developers in the West Coast for some of the condos that are sitting and not selling. Now, there's opinions on both sides. For you as a lender and someone who's directly connected with construction and development, do you see this as being a smart housing policy that helps stabilize the market, or does it actually create unintended consequences by essentially bailing out projects that the market just isn't supporting?
Yeah, it's a great question. And again, we're in the moment right now with the decision being made. I think it just got announced the last few days. And what will that look like kind of 2 years from now? I think what tends to happen, Paul, is we get to the 2 years from now and then people are very judgmental. But it's the decision that's being made now that is really important to kind of consider. And what I'd say ultimately is, a couple of things. Firstly, as a builder, like if you're going to sell any business, if you're going to sell things and make money, when the music stops, which has been my quote lately, the music has stopped certainly in the condo sale business, you probably need to be held accountable for the condos that you built. And so this bailout, it might be a broader kind of decision on behalf of Canadians, not necessarily focusing only on bailing out builders. Like I think there's probably going to be some implications. Obviously, I haven't read everything that's involved. There would be some implications to the builders. Like I don't think they're going to make out like bandits the way so far the media has made it seem. Like I'm sure they're going to have to eat their humble pie here. But ultimately, the question I would have is really, we had a foreign buyer ban that was put in place a few years ago, which is going to be eliminated or it's up for renewal, I think, in 2027. So the question really is, are you bailing out the condos today? And then when the foreign buyer ban lifts in 2027, if it does lift, will that then generate the interest and appetite to buy many of these condos? And if that's the case, then why not just lift it now
Right.
and allow that money to flow in? And again, that's another whole kind of, I think the foreign buyer ban, and I think if you go to any big city or any big area in the world, like think about, big cities that they've got foreign buyers throughout. And so I think that the ban on foreign buyers was a very dramatic approach to cutting the opportunity for foreigners to own real estate in Canada. I think, if and when it comes back, it needs to be a much more limited offering. So maybe you can't just buy 10 houses, you can only buy one. And maybe if you can only buy one, it can only be a condo. That'll probably help, because I think that the one thing for people to keep in mind is when you've got high net worth individuals from other countries, oftentimes they see Canada, and they should see Canada, as a very secure place for their money. And so they're not necessarily buying some of these properties with the anticipation that it's going to appreciate significantly. They just want a safe place for their, to have their net worth. And so long as the money is transacting through the big banks, which do a great job on, monitoring the money laundering components to money coming in from across the world, and they do a great job of that. So long as the money comes in appropriately and meets all the guidelines, then I think welcoming foreign buyers back into the Canadian housing market, is a good thing. And I think ultimately, with a certain pace, will also help with partly the buyout or bailout of the condo developers that it's starting in BC. I imagine it'll make its way into Ontario as well.
You're leading into my questions perfectly here, but I think you're exactly right. I think the combination of the large increase in immigration as well during that time, like I think that is kind of what prompted that foreign buyer ban is, we have too many people that are trying to buy homes domestically that we can't have other people coming in and taking up that inventory. But now with the immigration basically stalling or dramatically decreasing and people leaving Canada, now they're kind of having to rewrite that song, because you can no longer ban foreign buyers if also domestically nobody's buying them, right? Like you said, it kind of needs to be, it's one or the other. If everyone's buying them domestically, great. But if no one's buying them domestically, then something has to shift. And why wouldn't we invite, foreign investment? And like you said, I think they're looking for that security and essentially long-term slow appreciation versus, like you said, flipping it and making 20% a year. I don't think that was ever the intent of those foreign buyers, maybe some of them, but most of them, as you said, are just looking for some sort of consistent long-term investment. And that's what Canadian real estate did for many decades. The last thing I wanted to ask you about, Derek, was that I know Dave and I both, we've been talking about this a lot lately, that people are asking us as brokers about new builds, like building their own home, not new constructions, not, you know, Richcraft has this beautiful new home, or Minto. It's, I want to buy land and I want to build a home. I've never been faced with this question more than in 2026. It's usually, one or two projects a year, or someone asks you a question every now and then. But I've had at least more than a handful of clients ask me, we want to build a home. How do we do it? And for most people, as you know, it's probably not a realistic goal, just because of the cash flow that's needed up front, and just the overall managing of the project. But for you, as essentially an exclusive construction lender in the Ottawa area, for now at least, what do you see, or have you seen an increase in construction applications? And if you can, just give us a bit of a sip of the fire hose as to what someone who wants to do that can expect when going through the process of getting construction financing.
Yeah, and so great question. And ultimately, again, I think this is some of those, whether they're intended or unintended consequences of major shifts by the Canadian government and or Canadian business. So, when we shift so hard away from foreign buyer, the unintended consequences are is this inventory of condos, inventory of other things, and it doesn't necessarily need to be a shift all the way back. There could be some middle ground. There's a lot of smart people in the real estate world who could have, be brought together to have some opinion. And I'm sure we could land at a comfortable space that still allows for affordability for the Canadian domestic buyer and the opportunity for the foreign buyer. And so there's somewhere in between that makes sense. And that's also the case here. And so what's happened in the last few years is, as builders have pulled back and said, obviously the cost for a builder to build a home with all the red tape that's involved. I was talking to a builder not long ago. They said it's almost 40% of the cost of the build is all of the red tape and taxes and permits that are required to build the home. And so the end product, you can't just kind of look at all of the pieces that are required to build the house and the land and say, okay, this is what it should cost. You have to add another 40%. And that's not necessarily all the profit for the builder. So people, they want to live in new houses, and they've always wanted to live in new houses. So now they say, you know what? If I can't buy a new house, I'll build a new house. And so that's not with a period, that's with a comma, because to your earlier point, it's a lot harder to finance building your own home than it is to buy a Minto built new home. So if you're going to kind of look at a piece of land and a graph and say, okay, I'm going to take lot 27 and I want the 2-story and I want 9-foot ceilings and yada, yada. At that point, you really only have to give them, a down payment of 25 or 30 or 50 or whatever the amount is, but you're not having to buy the land and do all the work. You shift, but you're going to ultimately, and they're going to build you your dream home with this kind of whatever it is, significant premium, because obviously they have to make money in all of the different premiums that they're assessed as a builder. And so people are saying, you know what, I want to build my own home. And so, Westboro has been doing construction mortgages for 20 years. And it's just something that we've been able to maintain on our shelves. And when I say maintain on our shelves, I mean that others have come into the space and said, we're going to do construction financing, and then disappeared from the space. Others have kind of closed up shop and left through construction financing. And so I think it's one of those things where you absolutely need to be talking to a mortgage broker about any discussion about construction, because they're going to have so many different tools in their toolbox to be able to offer different solutions to the client. But ultimately, it's a customized solution for a client. So that's why it doesn't always necessarily fit in any of the bank's world. The bank does well with scalable product. So first-time home buyer, second-time home buyer, HELOC, refinance, they can push those through probably better than anyone else. But when it comes to a customized solution like a construction mortgage, now you need an individual underwriter that is going to work with the broker, the client, the builder on this journey for the next 12 to 18 months on building a property. Well, that doesn't sound like a banker where you're going to be calling into a 1-800 number and talking to someone you don't know. In the Ontario market, we're one of the bigger kind of construction lenders. And again, to pick up on what we talked about earlier, we do construction financing for, incredibly high net worth individuals, doctors, dentists, judges, lawyers. They all tend to slide into the private lending space for construction. And the two biggest reasons are speed and access to capital, where we can allow for draws to take place on an unlimited basis, and we can draw money back within a couple of days, which again, we can customize for the individual solutions, where you can just imagine dealing with a bigger financial institution, all of the different checks and balances that are required. We have those checks and balances in place, but as a smaller team, we can move in a much more agile and quick way. And when it comes to building, I'll tell you, in 5 years of doing this, we've probably done, hundreds and hundreds of millions of dollars in construction. So we could do a whole discussion just on construction financing. But the one thing I can tell you is it is a very stressful time for clients. And the build itself is the stressful part. You don't want to have any stress tied up with your lender, and do they have the money to advance? Do they have the understanding if things are delayed, how to handle that? And ultimately, you really, in this case, want to be dealing with the best of the best. And I would, obviously, I'd say this for sure anyway, but Westboro is by far the best private lender for construction financing in Ontario. And in part of the reason is simply because we have the money to lend. We have access to capital to lend, where others, it depends on the seasonality whether they have access to the capital to lend. And you could have a client who's looking for a draw and the lender doesn't have the money to give. And that just creates a ruckus that, as a client, you want nothing to do with.
Yeah, I can only imagine. We've heard of those kind of horror stories, and you never want to hear of a client being put in that position. The one thing that I thought you said that is really important for people to understand is the management of that project. Like when you're buying from a Minto or whoever, they've been doing this for decades. It's a well-oiled machine. They know who their suppliers are. They know who their project managers are. They know who the contractors and the tradespeople are on that specific project. It's well-oiled, right? When you're doing it yourself, if you don't have any experience in that, you're basically, you're dipping your toe into something that you have absolutely no idea what could happen, what could go wrong, etc. So for you as the lender, I'm someone who wants to build a home. Like, what sort of experience are you looking for, and what do they need to prepare for upfront before even having that conversation with Westboro or with their broker in Westboro?
Yeah, great question. And ultimately, the client has to have skin in the game, and in a more meaningful way than they would on buying the build from a builder. So in this case, we're looking for clients. Now, if they have a ton of equity in their property, now they could leverage that equity to start to use towards the build through either a refinance or a HELOC. So they could start to draw on the equity in their current property to start the build. Or in some cases, people sell their house, they move in with their in-laws, they have a whack of cash in their bank account, and that's how the build starts. That's the one I prefer, because ultimately then you have the urgency to get the hell out of your in-laws' house as soon as possible and wanting to get the build done as soon as possible. But the trick is really to have enough money to buy the land, to own the land free and clear, and from there have enough money to start the build. And once the build gets started, then we would step in and finance the rest of the build. The other nice thing about Westboro is because we do so many of these, we have very specific criteria that we ask the clients to follow from step one all the way through to the final step, which would be occupancy. And we have kind of client-facing documentation as well that really helps, where it's kind of a do's and don'ts. Over the years, we kind of sat as a group and said, boy, when things have gone a little sideways, which should clients not have done? And we have the do's and don'ts. Like an example would be, when you're having your property appraised to see how far along it's completed, that's how the draws are in essence managed. So if your house is 30% complete, more or less, we advance you 30% of the money. You're 70% complete, we advance you 70% of the money. When you're 100% complete, you have all of the money. And so, but you have the completion is by definition not necessarily having everything done that you think. So if you're going to really kind of put in a fancy schmancy garage with, shelving and full on drywall and all that, that doesn't count towards completion. If you're going to finish your basement, that doesn't count towards completion. So the $100K that you might put into finishing a portion of your basement if it comes at the expense of not getting the kitchen done, the
Right.
house is not 100% complete. And so there is a very kind of methodical approach that we take with clients to explain exactly through the budgeting process how the build has to go down so that the appraisals, when they get there, will be able to give us very definitive updates, not they started to kind of put in, a pool, or they started to put in landscaping. These are things that don't count towards the cost to complete of an appraisal when you're building a home. So we make sure clients understand all that up front, and we have kind of a hands-on approach with our underwriters to walk them through that. One of the challenges is in some cases, other lenders where we've seen issues. We see issues, Paul, almost every day these days because there has been a major increase in
Everything.
people
Yeah.
looking to build. And some other lenders will kind of say, well, we'll give you more money up front. And so the issue with more money up front is almost always, I could actually say always, these projects always go over a little bit, some a little bit, some a lot. And so if you have too much of the lender's money up front and they've capped you very specifically on the amount they'll give you, if the project runs over and you have all of their money, there's nothing more they can do. And they simply say, you know what, you're at 65% of the build complete. We have no more money for you. And if the build is over and the client doesn't necessarily they haven't sold their home and or they don't have any more equity to put in, the build stalls. And those are the times when these things can be very concerning for all parties that are involved, where we take a different approach at the front end to make sure that we've built in a little bit of a buffer so that there could be overruns. There could be a scenario where we have to put up a little extra money, but the net worth of the value of the property is there, given the money that went in up front, and we can allow the client to kind of go over a bit. So it's definitely an art as much as it is a science of lending when it comes to construction.
Yeah, very, very well outlined there. And I think I can definitely speak to Westboro's client facing handouts, as you mentioned, like even just having that actual chart that shows you, this needs to be complete to be considered this amount percentage complete to get that much as a draw. And it has like a very clear outline as to exactly what you need to do throughout the project to get the money. And I've seen even like I've worked with you guys on files where, you actually have your underwriters and your support team like walk up, like basically help manage the project and say, look, they need to do this, they need to do it this way. Like it's because of that experience that you have, it does make it a bit easier. And for the people that are listening, when they see those projects that don't finish and you wonder like, how could they not have managed their money better? Like, how is this project not done? Right? Like you see so many unfinished construction projects and you wonder like, how did they get here? Well, it's probably because, as you said, they mismanaged the money up front. They put too much into the basement or the garage or what have you, and now they can't finish the kitchen or they can't finish the siding or what have you, right? So it's very important to not only understand at the beginning, like how your money is going to be managed, but also understanding like what you're going to do if there is a shortfall. Like what is your safety net? And that's why I think to your point, the ideal client is someone that has all that money in the bank so that and they know we're going to be fine, right? Like we're going to figure this out. We have money, you have money, we have the project, we have the plans. Let's do it, right? That's the ideal client.
I agree. And I think ultimately, it's definitely a conversation that clients should always have with mortgage brokers, because, it's the mortgage broker who's not only going to help you decide and explain why this could be a bank product or a private lending product. The mortgage broker is going to be the person who's going to stay with you through the conversation and ultimately with the exit. And so we would also be working very closely with our mortgage brokers who book the mortgages at Westboro, because ultimately, once the property's built, occupancy is in place. 60 days after occupancy, that's the opportunity for anyone to put a lien on the property if they needed to. They don't. The mortgage broker is going to have the client ready to go with a brand new built home, removing the client from the private lending, which is really just was the intent to help them with the build and the short-term solution, and take them back to a bank who's going to be happy to take them on, because now you have a brand new, fully built home, easy peasy on the takeout.
Absolutely. So last question, Derek. We'll close it out with this, and then I got some. We always end the show with some mood boosts. They're just some really corny dad jokes that I'll hit you with to basically ruin your morning. But last question: what do you think private lending looks like in say 5 years from now? I know there's a lot of things changing in the industry. Obviously, a lot of economic uncertainty. Where do you see private lending being in 5 years from now?
Yeah, great question. I think ultimately that one of the things that makes Canada a great country is the consistency and trustworthiness of our financial institutions. And so, we have some of the best bankers and banking in the world. And so I think maintaining the strength of our financial institutions and holding them to the high bar that we all hold them to and the government holds them to is very important for the health and well-being of the country. And so that means that in some cases there needs to be an opportunity for people to lend money that will be outside the financial institution. So I think there will always be a need for alternative and private lending. I do think it's going to be an interesting next 18 months because, if Paul, I keep saying this whole thing about the music stops. It's my new line lately. But ultimately what I've been talking about is really this idea that right now, private lenders and consumers for that matter, we are all going to be held accountable in this economy based on the decisions we made 18 months, 2 years ago. So if people were lending through the private, financing world at 80% second mortgages 2 years ago, what does that look like today in their portfolio? And so I think that we're going to see a major shift in the next 18 months. We've already started to see it with a few of our competitors that have either gated or closed or in receivership. So I think we're going to see some tough times ahead. And I think it's just slowly coming now. By Christmas, we'll see it even more so, and certainly into 2027. And those who make it through will be left with maybe a few less competitors that are not necessarily going to be as strongly lending in interprovince and things like that, because they'll start to understand they really needed to know the backyards with which they lend. And I think that we will see a smaller private lending environment, but a private lending environment that will still be quite robust into the future and certainly 5 years from now as a good part of Canadian business. So that there's the banking section, the alternative section, and the private section. And I think the world's not getting any less complicated. Long gone are the days of the household balance sheet where you have, a General Motors employee and a teacher who both have pension incomes, who both have provable incomes, that have an obvious kind of principal residence, and there isn't kind of support payments and multiple properties and properties owned with brother-in-laws and condos and things like that, and people driving Uber and people having part-time jobs and people moving from employed to self-employed. Like, the world has got certainly way more complicated than it had ever been in the past. And those nice pensionable jobs that were very easy to lend against are going to be fewer and far between in the future. So I think that, with that in mind, it's definitely going to be a robust world in the private lending space.
Yeah, I think you hit the nail on the head there. That's my word of the day. You got the song stop, music stops. I got the hitting the nail on the head. But I agree. I think that there has been a huge shift in how people work, just the kind of the gig economy, right? Like, there's a lot of people that have that side hustle, that project on the side that is actually generating good revenue, and they may even shift into that more permanently. But we're seeing a big economic shift in employment as well, right? We're seeing the unemployment numbers all over the place. One month there's tens of thousands of jobs created. Next month, tens of thousands of jobs gone. Like, there's a lot of uncertainty, I think, moving forward. And when there's uncertainty and there's a lot of change happening, that's sometimes when people may require some form of alternative lending or private financing for the short term until things stabilize, and then they can kind of move back. So I couldn't agree more. I think as we see more uncertainty, it creates more opportunities for alternative types of lenders and private lenders to kind of step in and help clients out in that space. So I just want to say thank you, Derek, obviously, for taking the time out to kind of share your experience and your knowledge with our listeners. I'm going to now give you 4 of the corniest jokes you've heard, just to make your day even a little brighter. These are the mood boosts. We're going to roll into the mood boost.
All right.
I have 4 today. I got 4 today. And they're World Cup focused, just being that it's the World Cup.
Hard to hear as an Italian. Hard to hear as an
Yeah,
Italian talking
sorry.
about the
I
World
didn't
Cup,
want to hit
but
the sore spot.
yeah, that's
The
fine.
jerseys are on sale, though, at Sport Check. So if anyone needs one. Number 1, what's the best state to shop for a soccer uniform? New Jersey. New Jersey.
Love it.
Number 2, what do soccer referees send during the holidays? Yellow cards. Yellow cards. Number 3, why didn't the dog want to play soccer? Easy. He was a boxer. He was a boxer.
All right.
And last but not least, this is my favorite. Number 4, my boyfriend made a save during the soccer game. That's how I knew he was a keeper.
Oh, God. That's the best one. For sure.
Yeah. Thank you, Derek, for being here. Thank you, everyone, for listening. Derek, if people want to find out more about Westboro, like where should they go? And if you want, how can they get a hold of you?
Yeah, absolutely, Paul. It was a lot of fun and a great chat. Obviously, Westboro on the website, westboromic.com. And you can also follow us. We're actually quite active on social media. And so you can find us on Instagram. Me is, it's Derek_Serra, and Westboro is Westboro Mic on Instagram. And so you'll find a lot of us sharing some of the content and information, and some great kind of success stories that we have, and client stories that will resonate with our viewers for sure.
That's great. And we'll have to have you back on when Dave's here too, and I'll have him grill you some hard-hitting questions.
Yeah. Look forward to that. Happy to come back when Dave's back too, for sure.
Awesome. Thanks so much, Derek.
All
Thank
right.
you, everyone, for listening. New episodes every Wednesday at 10 a.m. Be sure to follow us on our socials as well. Thanks so much, and we'll see you next week.
Thanks, Paul. Bye, guys.